So, Kristina, you're the chief global market strategist. Explain to us what happened with equities, because we have to remember at the beginning of the week, they were shooting the lights out going up, and then they came down a lot on Thursday and Friday.
Well, it seems that a few different issues appeared that really changed sentiment and made it a lot more negative. First, of course, we heard from Mitch McConnell that it seems unlikely that we'll get a fiscal stimulus package anytime soon. And to me, that really was perhaps the biggest issue affecting markets. Of course, there are always concerns about valuations when a stock market, especially the tech sector, has had such a strong rally. But there was something of a perfect storm in terms of a lot of different concerns, including, of course, the presidential election and the potential for a contested election weighing down stocks in the latter part of this week.
So, Gillian, how do you see it? Was it the fundamentals, if you can call that, of the presidential election and not getting a fiscal stimulus? Or was it more the technicals of it just got overbought, particularly in big tech? If you looked at some of the daily moving averages, it was way over.
I think it's a combination of the two, but there's something else very important, which is that so much of the recent rally has been driven by the tech sector. And in fact, we have a story up on the Financial Times website right now saying SoftBank unmasked as NASDAQ whale stoking tech rally. What that means is it appears that SoftBank has been buying a lot of options in the markets, which have been essentially fueling that dramatic rally. And partly in reaction to that, you've seen a lot of volatility as people are taking fright. Now, frankly, it's unclear at the moment to what degree that has or has not helped fuel the rally in tech stocks, which have been quite remarkable. But the key point is this. A lot of people don't understand why the market has been essentially diverging so dramatically from the real economy. It's not so much about a V-shaped recovery or a U-shaped. It's about a K-shaped, a capital K, where you've had the economy and markets going in different directions. And there's been a lot of unease about the direction of tech sector. And so the fact you've got this extraordinary type of story coming out and rattling people really reveals the underlying nervousness as people try to make sense of something which actually looks quite odd.
And Gillian, I thought it was interesting this week, we had that K-shaped recovery, which I'd heard about from economists and market analysts, go over into politics as former Vice President Biden actually adopted that as part of his theme, that in fact the middle and the lower are getting worse and the top is going up. But as a practical matter, isn't that largely because of what the Fed has done?
It is largely because of what the Fed has done. That creates uncertainty because, to use a usual cliche, we're in totally uncharted territory right now. And people have never seen this scale of monetary stimulus, and they don't know just how long it can keep supporting asset prices, or, heavens forbid, what will happen when that starts to be withdrawn in the future. So that's certainly a great point of concern. But on top of all that, just to indicate this gnawing sense of anxiety and uncertainty as we look forward, there's a fact that the betting markets are currently putting quite different levels of probability onto a Biden victory from some of the polls that are coming out at the moment. And there is a feeling that perhaps some of the yardsticks we've been using in the past to measure not just the economy, but also the political sphere simply aren't working as well anymore. And that's before you even start talking about the uncertainty about COVID and whether there's going to be a second wave or not. Because what's happening right now in places like Spain and France should give pause for thought for anyone who thinks we're going to have a quick recovery from this.
Kristina, as we talk about fundamentals, if I can use that word in this context, one of them that came out were those jobs numbers at the end of the week, which I think were quite good. We're down under 10%, well under 10% to 8.4% unemployment. There was about 1.4 million jobs created. Now, we have a long way to go, but shouldn't that be actually buttressing some of the valuations in the marketplace?
Well, yes and no, because while this jobs report was certainly positive from a headline standpoint, if we were to drill down, we'd see that more than 200,000 of the jobs created were from census, our census jobs. So those are very temporary in nature. And we also saw leisure and hospitality jobs created a little over 100,000, I think less than 150,000. That's well below the 600,000 plus we saw in July. So those are worrying pieces of data that are in that jobs report. And what it suggests to me, and what we've seen when we look at the mobility data, is that there's something of a slowing of the recovery, which of course could get worse if we do see any sort of a second wave this fall.
So Gillian, which is it, glass half empty or glass half full? I mean, we're going in the right direction. We added well over 1 million jobs last month. At the same time, as Kristina just said, it seems to be slowing down a little bit, and we've got a long way to go. We have something like 11.5, 12 million people less employed today than before the pandemic.
Absolutely, and I can't stress this enough. I think so much optimism and sentiment has been focused on this idea that we're going to have a vaccine soon, and that will basically take us back to normal and everything will go back as it was. The reality is that even if we have a vaccine soon of the sort that the president has been promising, even in the best case circumstances, it will take a long time to be distributed. It's not clear that people will take it. And so the idea the economy rebounds quickly is simply, to my mind, a fantasy. I think we're far more likely to see a pattern which looks like an inverted square root sign or a Nike swoosh, where we've had a rebound because it's almost like a relief unleashing of activity, pent-up activity, but then reality sinks in. Actually, not only is there not clarity around the stimulus package going forward, but a lot of companies have been hanging on, avoiding laying people off, and that is now going to start in earnest. I think the autumn and winter could be pretty tough.
Kristina, despite the somewhat of a sell-off on Thursday and Friday of this week, overall, I think we can agree that levels of equity markets are elevated. Let me give you a tough choice. Is that because, as Gillian just said, they're pricing in a vaccine and really getting past this coronavirus, or is it just the Fed?
Well, it's largely been the Fed, but certainly there is some positive sentiment created by the pricing in of an early vaccine. Let's face it. What the Fed has done has been really extraordinary. And I don't think we should underestimate the impact of Jay Powell's words last week, announcing this change in the inflation targeting policy. It's very, very important. And it really suggests that we could see frothy valuations continue, and we could see stocks rally despite a short-term downturn.
So, Gillian, that's good for stocks. What about for regular old people on the street, for the real economy? Does what the Fed do really trickle down there?
Well, this is an issue which has provoked a lot of tortured, soul-searching debate inside the Federal Reserve and all the other Western central banks, because the reality is that elevating asset prices benefits asset owners, which are overwhelmingly the wealthy. And so you're essentially stoking up more income inequality. And I was in a seminar with a group of senior central bankers this week, and they trotted out the usual argument that, well, the best way to cope with inequality and poverty is to create lots of jobs, and that requires lots of supportive monetary policy. Yeah. And that's kind of true, but you cannot get away from the fact that with stock markets rallying like this, it's the wealthy it's benefiting.